Good morning, retail traders. I'm Washboard Jim with a Sneaky Snake trading strategy, and we're going to be looking at a falling wedge on Disney that came in Friday. And I want to show you what brought in that break on that trade before it happened. And I always talk about these chart patterns. I love my chart patterns. This is a Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. So let's get right to the chart. This was a real nice call on Friday. It's called a falling wedge off the 200 SMA, holding up to 63, all the way up to the top to 1, 2, 3, 4. Getting in at the 1, 2, 3, or maybe if you're a rookie, wait for the breakout and the little pullback and then take your trade right there. If you get accustomed to that, instead of buying it within the channel until you get a little bit better, wait for that initial breakout, and then on that pullback, that would be your entry. But I'm going to show you, I'm going to draw this all out and make it real clear to you, and then I'm going to show you how we got here. So I'm going to clean everything up. I'm going to go to the daily time frame. Someone asked me the other day, what time frames do I use? Well, it depends on how I use them all. I use them all when I evaluate a trade. I'll go, well, if I have to go to the weekly, if I have to go to the monthly, if I have to go to the yearly, if I have to go to, So right now I'm going to go straight to the daily. That's the first one I look at. And I see this thing's way overbought. Way overbought. I mean, it's okay. It deserved to run. We called the bottom down here at the double, triple bottom down here at the 1, 2, 3 at the very bottom. And then we held the 63 EMA. And now we've touched back to that same support level. So that's an indicator. We had the cross here with the 63 over the 200. And that's a real good indicator that you're at a solid support. Now I'm going to show you another thing besides that 63 EMA that made this trade so interesting. And that is we had 3 black crows right here. That means we had 3 days of selling into that 63 EMA. And if you notice, we've retested that 63 EMA a couple times. So I'm going to draw these crows in. That's 3 days of selling. And I had a confirmation that we hit the 63. So we had 3 days of selling here, but there was no other confirmation except it held this bottom here, but it never did break. But we do have a confirmation here that it hit the 63 EMA. I was asked, somebody said, well, I've never heard them use a 63 EMA. Research, buddy. I got this off of Schwab. Guy was trading with it. 63? So I've been practicing with it. So we had a nice little breakout. Now we have this nice little doji up here above the 21 EMA. So I've got the 9. As long as we respect the 9, we're still good to go on this trade. If not, we could pull back to the 9 and be a solid buy. But this is a good indicator that I wanted to come in the next day and trade this stock. So I'm going to pull up the 5-day, 5-minute, and I'm going to show you what happened after these 3 crows. 5-day, 1 minute. Here's your last crow. Then we had the big breakout. So I'm always talking about the number 3. That's my trading strategy. I try to make it as simple as can be. If you can count to 3, you can trade with me. If you can count to 4, you might make a little bit more. So I'm sitting in here Thursday. We got a big old snake, big old knife. Big old knife comes in. So I draw out that knife. I take it from this candle right here to that candle right there, and I draw that in. It's always the first 2 candles I take it to when I'm starting the trend. So if you can count to 3, you can trade with me. So we've got a couple good things going on here. We've got one touch here on that trend line, another touch on that trend line, and then we had the breakout on that trend line right here. Wow. So she breaks out. Now it's got your attention. We run into the 200 SMA and the 63. She pulls back. Then all of a sudden we create a pattern in here. We create a pattern. So you've got a couple good things going for you on this trade. Now, I've talked about patterns. So you got to identify and learn how to trade patterns. So we broke out and we pulled back, and we have a hammer here, and we jump in the trade. Let's say we took the trade right here. There's your left shoulder, and then there's your right shoulder. I'm going to extend that on out to the right. We got a two-headed snake. So I'm going to take this back off. You're taking your time, you know. You don't have to hurry in this trade. You just don't have to do it, because it gives you all the time sometimes. I mean, most of the times it gives you 20, 30 minutes if you wanted to take this trade. So I'm going to take 1, 2, 3. We had the pullback right here, and then we had the 1, 2, 3. So we could have took the trade here at the higher low, and then it came out with 3 white soldiers. 3 white soldiers on this 1 minute. That's an indicator that this thing's going to be bullish. 3 white soldiers right there. That's a bullish indicator. So it comes back and consolidates, and then we have a 1, 2, 3 at the bottom. And then we decide to go ahead and take the trade, because we know we have 3 white soldiers here, and we bounced off the 1, 2, 3. Now, you know, knowing me, I would have probably took it here at the double. I don't know. It would have depended. I don't know. But I know what I did Friday. I would have probably took this trade anywhere in here and called it a day, and then maybe added on to the dips. But as I was seeing, you know, these higher lows, that's telling me that we've got a nice little expansion pattern here. So I'm going to run this trend line up to that next candle and extend that on out to the right. So once we come up here and we learn how to count to 4, we break the number 4. One, 2, 3, and 4. Then we got the 1, 2, and 3. So we broke out of the 1, 2, 3, got our attention, and now we're looking for that flag. We're looking for that flag. Now this is a bear flag as it goes up. It is a bear flag, but it extended on out, and this thing's overbought, and we have 2 confirmations of the 3 black crows off the 63 on the daily, which means we could have hit a bottom. So you got to take all that in consideration. Now this is the 1 minute time frame. So I jump in the trade at the higher low. I add it on, and then I add on a little bit more here, or I just scalp it to the 1, 2, 3. You know, we got the 1, 2, 3 on the bottom, and we run it on up. We're holding on to this trade. Extend this out to the right, and we're still holding that trend line all the way up. And we're still holding this trend line with an inverse, with a head and shoulders. Comes back down, a little pop up there, and it come back down and hold that trend line. So you're still bullish. You're still bullish in the trade. Then you decide to go ahead and take profit when you want. Whoops, where am I? That's right after the 3 black crows. So by the end of the day, you're making a bunch of money here. Or you could have easily got out of here at this double top right here. It's not a perfect double top. Nothing ever is. So this, extend this out, and what you got is another flag. 1, 2, 3, 4, and we squeezed. 1, 2, 3, 4, 5. That was your last chance, man. But you're squeezing. See, you're getting tight. This thing could have easily dropped down here, but it decided to go ahead and break out to the number 4. You're so close to the squeeze of this triangle that you want to stay in the trade. And if once that broke out, man, you got a big happy face on your face. So the next day, I'm going to erase all this up. I know I got the 3 black crows bouncing off the 63 EMA, and I had a great day yesterday in the trade. And then I come in Friday, and I know it's overbought. I mean, if you look at the trade, we went from 110 all the way to 114, but it's at a bottom. You're going to get you always get some kind of pullback in that first hour, first few minutes of the day. Or not always, but it happens. So we're coming in here the next morning, and I'm cleaning this up. I want to remove it all. And we had a nice little breakout to the upside. And I'm going, guys, get ready. Get ready, get ready, get ready. We had little tweezer tops up here, and then she started to pull back. So I'm getting ready to catch the knife. And we come back and we hit the 200 SMA for a trade idea. I would scalp this first thing in the morning, maybe. Because I have a lot of experience. I know this thing's going to come up, and we got this little symmetrical flag here off the snake. I'm looking for patterns. This is on the 1 minute, so I know how to count to 3. 1, 2, 3, boom, out of the trade on that big spike, because we run into a head and shoulders. So I know that's the left shoulder, and that created the right shoulder. And when that last candle came in and bounced past the 63, I jumped out of that trade. Kind of played around a little bit in that minute and got out of that trade because I know this is a head and shoulders. So that was one trade, first thing in the morning. We're going to erase this. I get a knock on the door. Hello. Hey, Jim. Man, I seen that little scalp you did earlier, but I think we're forming another pattern. Will you look at it? Heck yeah, I'll look at it. So we clean it up. And we came back and hit that 200 again. I said, shit, this is looking good, man. This is looking real good. Let's go ahead and chart this out. Hey, you know what you got here? You got your beginning of a fallen wedge on an inverse head and shoulders. Yeah, there's your head. You got your left shoulder and your right shoulder. And we run it up and took that thing, so we started creating a flag. And I went and extended these lines out, and then we started squeezing. So if you can count to 3, this is inverse head and shoulders. If you can count to 3, you can trade with me. So after we started squeezing, 1, 2, and we broke out on that third time. Now that candle broke out of that trend line, so that's above the 200. So that's bearish. I always say wait for that pullback, and there you go. Right back to that shoulder line for number 3. Why didn't you count this one over here, Jim? Because that head was in the way. That's your left shoulder, that's your right shoulder, and the trade begins right there after that. 1, 2, 3, 1, 2, 3, and 4. So if you can count to 3, you can trade with me. If you can count to 4, you just might make a little bit more. This is a falling wedge. So we jumped in the trade. There's your little pullback. Once it broke out again. But we know we're bullish in this trade now because we squeezed out of it. And we counted to 4, and we counted our 3, and we got an inverse head and shoulders, which is a bullish pattern. Inverse head and shoulders. You won't see this on a 5-minute. You won't see this on a 10-minute. You won't see this on a 30-minute. But you'll see it on a 1-minute, and you're in at the very bottom of the trade. You're in it. Let's say we took it right here. I'm going to show you. We took the trade right here. on the number 3, or we took it right here. So those are our two choices. We'll go to the 5 minute. Yeah. I might have took that trade at the 5 minute. But I didn't really have an indicator to tell me to get in the trade but a squeeze, and we did break out. So I think the 5 minute would have worked on this. $10-minute would have worked on this. I'd have got in that doji at 113. So we got in down here, but that's, that ain't very much. It's not very much at all. So I'd have probably took that trade right there on the 30-minute. So yeah, I mean, I can't argue with that. But that's not always the same. But heck yeah, I would have took that trade. That's that right there. Two big old red candles, and then that doji. I would have took that trade. Somewhere in this candle here. I don't know if I'd have took it there because it would have closed at the doji, but I would have definitely took it off this one here. For sure. Somewhere in that mess. So I might have got in a little bit cheaper on that 1 minute. So let's go back to the 1 minute. It's always good to back test. So I'm sitting here looking for an exit idea. We're holding up to 63 all the way up. And then we start to get a little bit sketchy here. So I'm drawing in this here, what you call a rising wedge. That's a rising wedge. So you're getting close to the top up here. As you start to squeeze in the rising wedge and you drop down below it, it's time to get out of the trade. It's time to get out of the trade. Or it's time to get out at the top. Because you're squeezing into this wedge. Now, a good indicator to tell you to get out of this trade is when the 9 EMA crosses over the 21 EMA. That's also a good indicator to get out of that trade. And then you had this big drop in these candles. So once it popped back up to that 21, I would have probably took that trade and got out of it. Staying inside of that wedge, that rising wedge. So remember, every morning, you get a good-looking market coming in here in the morning, unless it has real good news. But we know we're bottom fishing because we took it off that daily. On them 3 black crows and bounced off that 63. And we counted it 1, 2, and 3, maybe 4 times right there, baby. She bounced on up. That's Disney, the falling wedge. Now, what is a falling wedge? What is a falling wedge? A falling wedge is a bullish pattern that begins wide at the top and contracts, and the prices move lower. This price action forms a cone that slopes down in the reaction of the highs and the reaction of the lower lows. In contrast to the symmetrical triangle, which have no definitive slope to be biased. Falling wedges definitely slope down and have a bullish bias, which this bullish bias can only realize once the resistance breakout occurs. Now, look, this is the secret about taking this falling wedge. Once it breaks out, it's going to pull back some. It's going to pull back some and retest. Almost 99.9% of the time, it'll pull back and retest, and that'll probably be your last chance to get in on that price level of that fallen wedge. So I'm going to put this link down in the bottom of it. It talks about the reversal. See how it pulls back? You got your wedge, breakout, pull back to that old resistance line. See, that's a resistance, and this is a support. Lower highs, lower lows. If you can count to 4, you just might make a little bit more. 1, 2, 3, 4. 1, 2, 3, 4. Give me 20. Check the volume. You've got divergence. This is divergence. That's when the volume drops and the price rises. That's called divergence. That's bullish divergence. Once it pulls back and hits that trend line, you're in that trade before everybody else is, and you're out of that trade at the double top or the next catalyst that you see, chart pattern, to get you out of that trade. If it's a double top, triple top, a head and shoulders, anything, a bull bear flag. So I'll stick this in the bottom of the content. Subscribe, ring that bell, count to 3, and you can learn how to trade with me. Count to 4, you just might make a little bit more. 1, 2, 3, 1, 2, 3, 4, breaks out, pulls back, and then you can take the trade and run it up to a double top or even to this here shoulder line. See, you got a left shoulder, right. You take and draw that line all the way across, and there's you another exit idea right there. Another exit idea right there, and you get out of the trade, and then you're looking at it a little bit later, and she pulls right back, and you maybe want to go ahead and ride it on out. Or you want to wait for the squeeze. It gets closer and closer to the squeeze, then you want to get out of the trade. We got big bear flag right here. Is that volume spike? And this candle, that's an inverted candle to the downside. Inverted hammer. That's a get out signal. That candle right there is a sell signal if I ever saw one. So that's it, Disney. Wish everybody a great day tomorrow. Be patient. Let them flags form. Write it open. Once the flag starts to form, then a beginner can start to take the trade. I can take the trade inside the flag, write it open. I can smack them right and left. But I know that I'm trying to help people that are trying to begin and learn, that are having a very hard time. And this is the simplest way that I can get the job done. All you have to do is count to 3. Trade that pattern. That's a sweet spot. I'm going to repeat, this is a sweet spot. You can't, if it starts to get, if it breaks out of this here, you're in trouble. But this here is a sweet spot. You don't get no sweeter than number 4, because you get a little bit more. If you get to 5, you might just take a nosedive. So that's it. Retail traders. This is the Sneaky Snake trading strategy, where I try to teach beginners how to trade chart patterns, moving averages, and being in the now. Have a good day. See you Tuesday. I think we're closed tomorrow.